Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of July the 3rd, 2017. Now we have a very busy week ahead of us. We've got a Canada Day in Canada obviously, and then we also have the July 4th in the US. So a holiday short week with a very heavy data week ahead of us. We have the FOMC minutes, we have the ADP report, and of course the non-farm payroll number on Friday. So what we're looking at now to begin our Forex presentation with, of course, is with the US dollar index. Now, what we're looking at here is the key levels from VantagePoint. 96.51, you can see that we've broken through this channel here. We've been in this channel for several weeks. We've got a break of the channel, but this is where we want to look very closely at the VantagePoint indicators. Now, you can see that our medium-term and long-term predicted differences are down. Our neural index is down, but our shorter-term indicators are starting to turn a little bit here, and the dollar is moving into oversold territory. So if the dollar is going to recover at all, it will be this week, in my respectful opinion, and that will be largely due to improved labor report, a stronger FOMC statement, but that's left to be seen. So right now the indicators here, we do want to be a little bit cautious, but we also want to make sure we're bringing price action into our levels here. So if we look at this, I'm going back into the October 2016 swing low. So we actually do have a support level here just above the 95 area, and then of course we want to make sure we're combining that with the VantagePoint indicators, and you can see in moving into this heavily oversold condition, it suggests that we may be limited to the downside this coming week. So when we combine that and we look at that and how the euro has been doing, if the euro is going to pause, it could very well be this coming week. Now things are starting to improve in the eurozone. I'll certainly give them that, but we have a very similar condition here. Now the euro has broken above its swing high. That was coming in at about the 113 area that I've talked about over the last several weeks. We were able to push above that. The euro has been relatively bullish, but now it could be time. Currencies, guys, much like stocks, nothing goes straight up and nothing goes straight down. Things pause, they retrace, and then they make their next move. Now, in most cases, this has nothing to do with Fibonacci or Elliott wave or any of this stuff. We simply run out of buyers in this particular case. So our key VantagePoint level, 112.47. So we're all the way up at 114.26. The further we move away from that key VantagePoint 18-day predicted moving average, the more likely it is we're going to retrace to it. So once again, when I look at our medium-term and long-term predicted differences, they're strong, but the short-term predicted difference and the strength indicator are pointing down, and our predicted RSI very consistent with the dollar index being oversold. The euro is overbought, so we are likely going to see some kind of retracement this coming week, potentially down into this 113.13 or the 112.47 area in a worst case scenario. With US Swiss franc, basically the same trade, but you can see, much like the dollar index, we have a big swing low sitting down here at 95.50. So the dollar index and the US Swiss franc, they absolutely mirror each other. One goes up, the other goes up. One goes down, the other goes down. So if the dollar index can bounce off of this level, we are going to see US Swiss franc recover. Now the indicators here, again, we're in oversold territory, but it's still, the main indicators are pointing down, but again, nothing goes straight up and nothing goes straight down. So if we're looking at retracement areas here, we would be looking at a retracement back towards this 96.29 and 96.72 area. Now, as we move in towards our pound dollar here, in my respectful opinion, the British pound is grossly undervalued here against the US dollar. I think Brexit's a very good thing for the UK. So many problems there, but for the most part here, everybody is in fear of the Brexit. I don't think it's a bad thing. I think it's actually a very good thing. So when we look at this, we've got a trend line break pushing above our resistance. An excellent call here from VantagePoint on that triple EMA cross. But once again, we're approaching a very powerful swing high here that comes in about the 130.60 area. So we must clear this area up here. I'm going to highlight this so everybody can see it. We take our trend lines off of our two swing highs. This is the one we have to be careful of. Our key vantage point level 128.30. The position of the predicted MACD is suggesting there's further gains ahead for the British pound, but again, I think we're looking at a corrective move first before we get that big push. Now, if we can get a big push through 131 at the beginning of the week, then the sky's the limit for the pound dollar. However, this is an area that will not go down easily, so we have to keep that in mind. The shorter term indicators from VantagePoint, which I'll highlight right here, are pointing to a little bit of weakness in this uptrend. And this is what we look for here, guys, is a needle in a haystack going into the next trading week to say, okay, is the pound dollar really this bullish? Is the US dollar really that bearish? Well, that certainly is debatable. So when we look at this, we look at the indicators here, how they're measured based around the correlation to 30 other markets, and it's suggesting that this trend may not be as strong as we think it is. So look for a retracement, but we would still be buyers down to 128.30. A break of 128.30, we would rethink the long position and consider shorts. Now, as we come into the dollar yen is notoriously volatile going into a week of non-farm payroll and also the FOMC minutes. So when we look at our critical levels, the first thing we always want to identify, the key VantagePoint 18-day predicted moving average. That's going to come in this week at 111, or for next week, excuse me, at 111.49. That's this key VantagePoint 18-day predicted moving average. We're basically moving somewhat sideways on our predicted short, medium, and long-term differences. Our strength indicator has slipped below the zero line. The position of the predicted MACD is quite good here as we're breaking just above this zero line. You can see the last time we had a triple EMA cross and we broke above the zero line on the predicted MACD. That led from a rally from basically 111 all the way up to the swing high at 114.50. So we can't rule out that we're not heading towards 114, but this is going to be dominated by that data this week, and more importantly, what is in those FOMC minutes. Now, in a week like this with my own direct clients, I would warn them to be very, very cautious around the dollar-yen pair. The whipsaws back and forth on any little bit of news, so be very, very careful with this one going forward, as again, our indicators are mildly overbought, but we still have room to extend. Most of the triple EMA cross that we see from VantagePoint usually last for anywhere from 7 to 14 days, so we're getting close here to that 14-day mark. So if we count all of these bars every time that this has gone up, we've got 2, 4, 6, 8, 12, 14, about 16 days on the last one. Right now we're 2, 4, 6, 8, 10. We're about 13 days in. So be very, very cautious when we see people getting overly bullish on the dollar yen here. Be very, very careful. Now, as we move into our three main commodity currencies, I've talked about these channels that we've seen here on the USCAD. Basically, we were heavy sellers on the break of 134, and we were heavy sellers again on a break of 132. So when we right now, in my respectful opinion, we are somewhat overextended here. When we look at our downside indicators, our predicted RSI sitting all the way down here at 12.8. Very, very seldomly, guys, do I see the VantagePoint predicted RSI holding down at this level before we see a significant bounce. So I would look for a retracement this week, potentially to that key VantagePoint level at 132.27. I think that's very likely. Oil is going to continue to dominate this pair, though. If oil continues to advance, that will help US-Canada move lower, but I think right now the downside could be rather limited because, again, we've moved a considerable distance in the last couple of weeks from 135 all the way down into this 129 area. So if we can hold above 129, we are likely going to see a retracement. And again, when I look at these critical vantage point indicators, our medium and long-term indicators are still pointing down, but our shorter-term indicators are pointing towards a retracement along with that heavily oversold condition. Now, as we go into our final two commodity pairs, very similar pairs here, guys, Aussie US and New Zealand US, they're almost identical. The Aussie, I've talked about this over the last couple of weeks that we are likely going to advance. Myself, my own direct clients, we've been long this pair for literally weeks here, based off of this original VantagePoint triple EMA cross back in this 74 area. Now, we are coming up against some significant resistance here. The one that is the most concern to me here is 77.50. If we can break 77.50 on Aussie US, guys, we are going significantly higher for the better part of 2017. But that is left to be seen. This trade will be dominated by gold. Right now, our predicted short, medium, and long-term differences. Plenty of room to extend. The predicted RSI, though, again, a little bit overbought. This is where we bring this in. We look close at those key vantage point levels, and again, that critical 18-day predicted moving average, the further we move away from it, the more likely we're going to retrace to it. Now, that critical level currently comes in at 75.83, so be careful about buying heavily up here unless we can break through this 77.50 area. Then we should be free and clear up into the 78.50, 79 area. But I think that a retracement based around the Vantage Point indicators is definitely in the cards. Same as New Zealand, US here, guys. You can see we're coming up against some very, very significant trend line resistance. We're basically, for the last 5 trading sessions, we've been all tangled up in this trend line here. Our key vantage point level, 72.37. Our indicators are starting to move sideways. You can see our predicted MACD is basically dead sideways. And when we see an indication like this and we can attach that to price action with a known trend line area, that tells me that this pair is probably getting ready to retrace also, likely back into this 72.37 area, and we can reassess longs there. So again, once again, guys, a very, very busy week next week, but an ultra illiquid week at the beginning of the week with the holiday in Canada and the holiday in the US. So with that said, this is the Forex Weekly Outlook for the week of July the 3rd, 2017. And again, my name is Greg Furman.